All right, guys, welcome back for another video. Well, today's video, I want to focus solely on price action and price action as it relates to equities, Forex markets, and also tail it back into Bitcoin. But, I won't be talking about macro today. I won't be, doing any of that. I will show a live trade that I currently still have open on my Bitcoin position. But yeah, this is just going to be a very price action intensive video. Anyway, so let's dive right into it. So right now I'm looking at the SPY S&P 500 chart on the weekly. Now the really critical thing that happened last week that's big news is the weekly downtrend that had been going on essentially since this lower high was set in here in March of 2022. So basically the downtrend that has been confirmed, not the absolute peaks over here, but the downtrend was confirmed at this high right here, this lower high and this lower low relative to that low. So that's been going on for roughly a year, and we actually just broke it, right? Because we have a higher low here and a higher high above these highs, right? So even if price were to collapse from here, you still have this higher low here and this higher high here. Now, we can kind of drill down on this and look at it and see, whenever you have that type of trend shift, it doesn't necessarily, identify the beginning of a good trade or a good entry, but um, what I generally do is I'll go down and I'll look at the swing that actually broke the weekly high. So this is the weekly high we marked off that set in the higher high on the weekly up here. And generally what I'll do is I'll go in on a lower time frame and look for the low that broke it, right? So there's the old weekly high, and here is the low time frame low that broke the weekly high right here. So we'll just mark this off. You can anchor a fib on it just to, give you a little bit of but you don't necessarily have to do that. Right now the price is basically coming down into a retracement into the high set from that low right here. If maybe maybe you trade a point of origin, point of release strategy, price actually hit the point of release right here. We can see that. Well, not exactly. Actually, front ran a little bit, but just keep in mind this line here on the chart is the previous weekly high, and this is the swing we're looking at. So, if this were to be a swing failure pattern, generally what you'd see is you'd see some old historic high broken that we marked off, and then as soon as it sweeps the liquidity above, then it runs back for the lows. If you see that, then you start to create, what is considered to be a swing failure pattern. Whether you're looking at these lows or these lows, that's up for interpretation. But the idea is you run for liquidity above old highs, shift to trend. Generally, that's where you'd start looking for entries on the long side, right? Because the downtrend's broken, unless you start running for the lows. And I know that's like nuanced. I'm basically saying it can go up or down. But the point is that this is the area of invalidation I'd be looking at, right? So if it's above these lows, then I would be looking for long continuation. And if it breaks below these lows, preferably closing on a significant time frame, then all of a sudden, bearish retracements come into effect, and you probably get, the market looking for liquidity to the downside. So looking at, obvious swing lows, right? So if this level here at 402 gets lost, then the next logical level is down here at 387. And now keep in mind, if that happened, still you still have a textbook uptrend on the weekly. It isn't until these lows get violated that things, for trend traders start to change significantly. Um, anyway, so let's let's go to Bitcoin right now, and I'll talk about my open position currently. Let's see if I can open this trading panel. Just a paper trading account. It's the one I've been sharing basically for the last few weeks, last few months. You can see here I've got this long position open down from 17,656, 1,039 Bitcoin, and it's pretty deep in profit. Now I've held that through the recent downturn here, but I also have this hedge position open, and I'm actually going to pull the hedge live on this video, just based on what I'm seeing in the chart, what I'm looking at. But yeah, let's first off, let's do some analysis on the Bitcoin chart, pull everything off. Yeah, so here you've got a break above these weekly highs right here. So I want to mark those off. I want to mark this off because this, clear trend change of behavior right here. You've got this downtrend, capitulation down here, break of the highs. This is the FTX highs, prior to FTX going insolvent. You get a break above, and now we're retesting back into it. So we're also retesting into these significant highs, but there's a lot of other things going on as well. So if we look at the monthly closed above is testing back into this month, or this monthly high as well, confluent with what we just mentioned. And let's see. If we mark this off right here, you've got this high there, this high right here. So you can see price came up to this level right here, kind of, changes state of delivery. You can mark off the bodies of the candles. Let's see. Mark off the bodies of the candles right there. You see price comes right up to that, stutters a little bit, comes down, runs back up, hits the exact high, comes back down a little bit, runs back up, goes above the high. You get a little bit of stalling price behavior at this level. Get a down close candle right there, and then a push up, breaking above, creating a new swing. And this swing from this low here to where we are currently is what I want to look at. I also want to keep in context the historical price action that's going on right here, but I just want to frame the chart with that in mind, right? When we broke through the support up here at this base, so you can see kind of similar to what we had, and this is probably some historical price level as well. Yeah, you can see it hit this level right here. Basically, essentially, if you went to a daily chart, it's probably even more refined, but you get the idea. Price kind of approaches that previous historical high, changes state of delivery similar to here. Only here, rather than breaking above it, it starts to break down, and you can see it broke below this base right here. And this is your gap fill, inefficiency fill down into the prior historical high and this level right here. So now the chart's starting to get a little messy. I'm just going to clean it up a little bit because we really only need to see a few levels. All right, so price clears this gap here, fills this inefficiency down here, fills it into this wick right there. And that's basically the context of this swing, referencing this low right here. Now, what's interesting is that, price filled the inefficiency completely down to this level, but in the process of doing so, it also created its own inefficiency. So if we go to a 15-minute chart, you can see on its way down to hit that level that we marked off, it created another set of inefficient price behavior. Now there's a little bit of a retrace up here. You get this push down, then runs up. But this area right here, you see you got your bodies up here, and then a wick right there and a wick right here. Inefficiencies in this level. The market generally draws towards areas of inefficiencies. Of course, it's not a guarantee. Price can always run further, especially if there's a strong catalyst in the market. But that's just at least the perspective that I tend to view charts with and tend to view the market with, is that, after, an inefficient move, price generally tends to fill the inefficiency, which kind of puts me at odds with trend traders a lot of the time, because this is inherently a counter trend type of idea, right? So in order to create some type of inefficient move, you're going to create a series of higher highs and higher lows on that particular time frame, right? Now we're looking at the 15-minute chart right here, but you can see what I mean, right? In the process of setting this parabolic price action for this time frame, you do have a set of lower lows, lower highs. right? So in order to trade this inefficiency, you're kind of putting yourself at odds with trend traders saying that, yeah, I don't care about the trend on this time frame. Uh, I'm just gonna look for this to get filled. And that's a lot easier to do when it's like a 15-minute chart, right? Because people don't put a lot of stock into a 15-minute trend the same way they would with like a daily or a weekly. Um, but really, the same concepts apply on the daily and the weekly. And I think if you were to go to backtest Bitcoin like on the daily and the weekly, you would see that those kind of like if you apply a trend based model to Bitcoin, like it just doesn't work very well. And I know it's kind of like blasphemous to a lot of people, but it's just kind of the reality that I've found in backtesting. I know trend trading is like one of those things. It seems like it will put you in favorable odds, and it's really hard to understand how it couldn't. But I think to the extent that you can understand how it can't or how it won't, that could potentially be helpful. So let's see. Let me pull up this short position. Yeah, so I got this hedge. Really, it's not a short position. We get the indicators off the chart. So yeah, again, I'm just gonna, I've got that short opened up from up there, came down, tested this level, filled that area I was looking for to hit. And now I think is a good time to pull this hedge. So it's in profit, 144,747. Let's go to the paper trading. It's 112 Bitcoin. So I'm just going to close this position. Close. And you see that marked 144,000 in profit. You can see the account history here. You got these big profits being taken, some on the underlying position, and then, of course, more as you go further down. This is actually managing hedges as it gets above. But you can see that the profits are, when I do take them, they tend to be very large and very substantial. Um, there's sometimes there's a lot of red, but that's just actively managing a hedge. If you're managing a hedge, that's say 20% of the size of the underlying spot position, and the market's going in the favor of your underlying spot position. If you're dynamically managing that hedge and maintaining that 20%, um, you know, uh, hedge allocation, then that means you're going to be opening closing positions at a loss for that 20% position against your underlying. So it'll mark a lot of drawdowns on your P&L, but meanwhile, your spot underlying position is much larger and your equity is going up very significantly. That's why on this position, you can, on this account, you can see that my account balance is a lot lower than the equity, right? Because a lot of the equity is in part by the underlying account balance or the underlying spot position, which is essentially open from down here. So if I were to close the position, let me go over to Coinbase. Let's see. Yeah, if I were to close this position right now, which I'm not going to because I'm anticipating higher prices, then the equity, that 686,840,000 in equity would be secured under the account balance. But I'm not going to close it now. I actually just collapsed a hedge because I'm looking for higher prices, right? I think this is like a strong monthly close off the low, testing back into the prior monthly high. And I'm looking for, again, tying into the inefficiency concepts we talked about earlier, I'm looking for that same type of effect on the higher time frames. So you can see that pretty much here, right? So you have what's considered, could be classified as a period of consolidation up here relative to this period, and then a period of consolidation down here relative to this period of inefficient price movement. So I do expect, if price does rally higher from this point and takes out these highs right here, I think it probably may encounter a little bit of resistance around here, around this high right here, which we didn't test. We test the bodies, but we didn't test the highs. But at the point where you get like a weekly close above these highs, then that's when you start to get your parabolic uh, price action. Bitcoin, where the gap gets quickly filled up towards this region. Doesn't necessarily have to stop at this region or even reach it, but that's generally the area I'd be looking at. And I want to keep this underlying spot position open, so that if that price distinction does play out, that I have a position and I'm positioned to take advantage of that, because that type of movement in the market doesn't happen very often. Now I may take profits on the way up there, but you know I just want to have that underlying position to take advantage of what I think is going to happen in the market. Anyway, I'll just talk quickly about the dollar currency index right now. Let's go to DXY. So, tying back to the same concept I was talking about earlier, you probably heard me talk enough about this by now that you can already tell what I'm going to say before I say it. But you have this area where price action. Let's put the parabola on this chart real quick. So price action, or the dollar, moved parabolically off the lows in May 2021 all the way up until October. And the period of this movement where price actually moved the most aggressively, well, actually, not necessarily the most aggressively, because that's always the top of the parabola, the final push. But I mean the most inefficiently, in the sense that you don't have any retracements into this area right here, between this area, whereas the other areas you do, right? You get a go up here, fill into that high, go up here, fill into this area right here, go up here, fill into this high. Essentially, again, it's not perfect, but you get the idea. And then you get a push up here, and it doesn't fill at all. Well, I mean, at least not this area right here. And then you get a push up, fills back in, 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 and then breaks down and creates another inefficiency right here on the break of the parabola. So these are the two areas I'm looking at. Again, this is just the way I look at charts. So you got this tapped right here, right? So it just wicked below this level briefly, but sometimes that is a distinction that happens with this price characteristic. So now the nuance here is that if this level gets taken out, then you probably get a full slip down to this area right here and completely fill the inefficiency. But that's a nuanced price behavior right there, right? It can be, this low would be support on first pass, and then the wick created on the right-hand side of the chart is a risk management level on second pass. So you've got your two areas of inefficiency right here and right here. Let's go down to the daily. So you see the dollar hit that area and then rallied up immediately, taking out these highs right here. And you can see that price basically rallied back into the high and had a successful retest. Again, it doesn't have to be perfect, but sometimes zooming out helps you from getting too far in the weeds, right? If you zoom out here, I mean, this is a retest of this high right here, essentially. Front ran a little bit, and then you get a push off, successful retest. Now, the reason why I have the X here is basically because this is the risk management level I would be looking at if I were long. Whenever you see breaks of this, kind of ties back into what we were talking about on SPY and the S&P 500. But whenever you get a change of behavior like this, you want to see price like really run quickly, right? Because the more it like runs up like this and then kind of stalls and then starts taking out the lows again, that's generally not a good sign. And if I saw that happen, I would not be playing this as bullish as I would not be looking at this as bullish as the dollar is currently above this level. Now that's interesting, right? Because you have a setup, basically the way I'm looking at Bitcoin, the way I'm looking at the dollar currency index, the way I'm looking at SPY. I'm looking at that all three of those markets with a bullish bias. Now it's particularly interesting with Bitcoin because generally that trades inversely to the dollar. But some strong rallies can happen when dollar's bullish. Who knows? We'll just have to keep an eye on the chart. Also keep in mind that next week there's a CPI data release. I'll be doing a video on that. I think that comes out Tuesday, February 14th. So keep an eye out for that, and I'll catch you guys in the next upload.